Welcome to the Market Mindset. We are the hub for news, results, and CEO interviews focusing the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns. If that sounds like something you're interested in, you can help support us by liking this video, subscribing to our channel, and clicking the notification bell. For more info, you can visit our website. All links are in the description below. Now let's get into today's video.
Hello, everybody. Welcome to the show. It's a real pleasure to catch up with Dr. Marc Faber. He is a publisher of the Gloom, Boom, and Doom report. It's been a while since we've spoken to him. We're going to talk about a number of things, including interest rates, the outlook for the end of the year, and what we should expect on the year coming forward.
If prices go up 10% and your wage goes up or your compensation goes up by 6%, in real terms, you lose out by 4%. Similarly, if there is inflation of, say, 8% and your bank pays you an interest of 4%, then you have real negative income. In other words, it's a sort of expropriation of your money. Anyway, my view is that we had favorable times, 1981-82 to 2019, 2021 in asset markets, real estate, stocks, bonds, everything. And starting 2021, we've been in difficult times for asset markets. Some assets are down 80%, others are down only 10, 20%, and so forth. But basically, we have a contraction in asset values. And I think this can continue for a number of years. Not everywhere, because we have an example in the case of Japan after 1989. At the time, in 89, the Japanese stock market was more than 50% of the global stock market capitalization. So it was the biggest market in the world by far. And then Japan went down, but the money flowed into other markets. And I think the same could be true that the US market, especially the FANG and FANG related stocks that had such a big market weight within the S&P, that they go down, drag down the index, but other things in the world go up. I mean, I give you an example. This year, at the beginning of the year, one of the most popular markets among investors was Vietnam, because it was said, oh, there is a reshoring or relocation of production out of China into Vietnam. So the outlook for Vietnam is very favorable. What happened? Vietnam is down in dollar terms 41%.
Yeah.
And which market was the most unfavorably rated market in the world? It was Turkey, because in Turkey you have Erdogan, and he pursues in extreme a monetary policy, just like Mr. Bernanke dreams of. He's basically the mentor of Bernanke. He and Mugabe of Zimbabwe.
Yeah.
So they are money printers, and of course the currency in Turkey collapsed as a result of that, and also asset markets went down. But the Turkish market was cheap. So if you bought the Turkish fund at the beginning of 2022, and you sell it today, you made more than 80% of your money. I want to make clear that from now on, it's going to be very selective where you can make money. Also in 22, you made money in energy stocks. And of course, you made most money in the stocks that the green communists hate the most, coal stocks.
Yeah.
That was the fantastic sector, but it was hated by the Greens, of course.
Yeah.
And John Kerry. You should essentially always buy things that are hated by Mr. John Kerry. Anyway, what I want to say is, we can sit there and say the markets are going to be unfavorable for the next 10 years, which I believe. Maybe they go up nominally, say between 1966 and 82, the market didn't go up at all. But some stocks went up, and the Dow Jones, inflation adjusted, went down by 70%. Inflation adjusted.
Yes.
But because dividends were high in those days, in the 70s, usually about 6%, the Dow was yielding around 5-6%. If you added all the dividends, then you broke even.
Yes.
So I think investors have to adjust to a new world and be realistic. They're not going to make any money in stocks for the next 10 years. Now,
yeah. The idea of just
plugging 10 stocks that have the potential to go up a lot, but they're also relatively risky stocks.
Yes.
Recently, we started to recommend Hong Kong because I have had an office in Hong Kong since 1973, so almost 40 years, and I lived for almost 30 years in Hong Kong. Now I live in Thailand, as you know, in the north, in Chiang Mai. But I have never seen the mood about Hong Kong as negative as it was just recently, both among local people and among international investors. So the Hong Kong market really got oversold, and most property companies, and they're not leveraged, because they are family owned. So the families, they're very rich. They don't need to borrow a lot of money. They actually don't know what to do with their money. And so these property companies were all selling at the discount of around 50% to asset value. Now, will property prices go down? Yes, I think so. They can still go down somewhat. But at the same time, if you can buy an asset at less than 50% of book value, is not so bad either.
Do you think some of this, like the approach by printing trillions of dollars, was if we print this money, we could spur on some of these key sectors that, of course, like a green initiative, they're hoping for, and then by doing so, it would cause another inflation in asset prices, like it would cause another exceptional growth. Was that kind of, you think, the hope of printing all the money?
I don't think that the employees of central banks are very deep thinkers.
Okay. Yeah.
Let's put it this way.
Yes.
I believe they are largely ignorant of the classical economic theories, and they lack common sense. I mean, if you just study economics for a few months, you know that wealth and creation does not come from money printing. That should be clear.
Yes.
They tried to deny that, and they tried to create an artificial prosperity, but they thought they're doing the right thing. They are convinced that money printing is a good thing.
Yeah.
And I'm telling you, I think they'll do it again.
Yes. They seem to be hinting that. You hear about this, we're tightening, and then QE might happen again. It's like there's a signal of, then of course, people that are only used to the free money, and there's lots of people, even my generation, that would be used to this expansive monetary policy, that would go, yes, we need that again. It's like a drug, give it back, we need it, or things can't work.
Well, they will say it's the least of all pains. They will say the alternative are worse. And so let's print a bit and adjust our inflation target higher. And I've seen just an article recently that said, well, we may have like an average rate of inflation of 5% for the next 10 years. but that's not so bad.
Yes.
That's quite okay. So I think the situation doesn't look very good, but equally we have to adjust to it because we can't change it. You and I cannot go and change it meaningfully. This is decided by some people. We don't know exactly who these people are who decide these things, because, is Biden running the government? Was Obama running the government, or people behind them? And is the Fed acting on their own, or do they get instructions from someone behind the scene? Who knows? We don't know.
We don't know. It's interesting. That's
but one thing I can say, the monetary policy have created an environment of a lot of excess liquidity and of cheating. There's a lot of fraud. And I hope that your viewers or listeners don't ever think that the whole crypto business is a phenomenon that was created by Mr. Satoshi in Australia. This is created by some powerful people to transfer wealth from poor people to rich people.
We're definitely seeing that now with the amount of fraud coming out, the amount of cryptos failing on large scale. And it's, if I could
the worst part, this fraud is not described as fraud, but as, well, this is what happened.
Yes, there seems to be
the person who was involved in it and his staff, they're still walking around freely and giving speeches as if nothing had happened.
Yes, that sends a very distressful image and message to everyone out there that how is this person walking free when this is a deliberate fraud and there's no accountability?
Absolutely. I mean, but anyway, maybe I can give you a few ideas for, for investments for your viewers.
Absolutely, because I wanted to touch on two different things. I want to get into mining, but I want to get there via saying, do you think part of, say, like the Fed is that they're defending the dollar? So if we were looking at the dollar hegemony compared to, say, the BRICS, like if they're, I know this is getting into the very speculative world, but do you think there's a bit of a war, a battle of the Fed saying we need to defend the dollar at the expense of the average, at the market or anything else? Do you think there's that kind of battle going on, or
actually, I believe the Fed and the Treasury are rather embarrassed by the strength of the dollar. There are some advantages to dollar strength, but at this level of dollar vis-a-vis other currencies in the world, when I compare, say, the price level here in Thailand to the price level in Europe and in the US, I have to say that the price level here is at least 50% lower or more. You understand? So
yes,
I feel that at this level, the dollar is rather vulnerable. Now, is it very vulnerable against another disabled currency, the euro, which is even worse off than the US? But it could change. You understand? At the moment, I'm just saying, the Eurozone, which is led by Ursula von der Leyen, is a disaster, a complete disaster, economically and politically and socially, and will have probably not extensive strength in the euro. But I believe an investor in the US should take money and invest overseas part of his money. I mean, at least, in my opinion, 50%, maybe more.
Okay.
But you understand, I think it is also important to have assets where the custody is diversified. In other words, don't just buy a Japanese stock from your US brokerage account, but you open a brokerage account in, say, Japan or in Singapore or maybe in Russia or maybe in China, that you are diversified.
Yes.
I think this is important because I can tell you, I have many friends in Europe. They had large holdings in countries like what became Eastern Germany, Poland, Czech Republic, and so forth. The whole aristocracy in Eastern Europe was wiped out in the Second World War. Wiped out, gone. The whole aristocracy, because my grandparents had a hotel in Switzerland, we only had aristocrats. They stayed for 3 months in the resorts of Switzerland, and Indian people and so forth. And also in 1949, all Chinese wealth in China gone. Nothing left.
Yes.
I know a Chinese, he was one of the richest families in Shanghai. In Hong Kong, he worked as an assistant to one of the generals.
So for people here, I mean, really, it is a matter of opening. It's not just like you said, opening a stock account. It's actually having a bank account. There's a lot of benefit to having actual bank accounts in foreign countries.
Yes, I think so. I mean, as I said, it's a diversification. I would not hold all my assets in one country. I would not hold all my assets with one bank.
This brings me to another good question, because people, and like myself, would go, okay, I should maybe just buy gold and physical gold. But it leads down the path of what year was it the U.S. did actually expropriate gold from the citizens?
1933.
33. So that's not beyond.
Well, they didn't expropriate. They paid $25 an ounce.
Yes, sorry.
And then they revalued it to 33. And they then declared it illegal to own gold. I mean, someone could have sold it for 25 and bought it back for 33, but it wasn't allowed to buy for 33. You know? But a lot of people didn't tender. The people with the right connection didn't tender their gold. They kept it.
Yes. And I mean, it seems to some people that seems, well, it's ludicrous to think, in a Western country this could happen. But we've already seen types of things, very authoritarian types of pushes, and certainly in Canada, freezing of bank accounts of people that had political views they didn't like, people on social media, whether it's being PayPal or any of these other types of apps.
Of course.
Boom, you're off.
Do you think that Trudeau, this idiot, would hesitate to take the gold away from some people?
Yeah.
If they have a different view?
Yeah.
I'm surprised he's still prime minister, that there hasn't been a revolution in Canada.
You me as well.
But I tell you, these Western governments, they claim, when I grew up, people always said, oh, we have democracy, we have freedom, and so forth. I've never seen an authoritarian government as bad as the current democracies we have in the Western world. Ditto for Australia.
And that's a big thing to say, because I mean, how can you possibly have efficient markets if you're not only your society is in shambles, the economy and the people in charge, there's a lot of corruption. How could you possibly have that data reflected in a market that seemed reasonable?
I like a lot of corruption. I'd say only corruption.
Only corruption. Okay. So so there are people that can open up offshore bank accounts. What about like people that, they've got 100,000 or they have 50. A lot of them would think, listen, if I just stick to my ETF, my Facebook is down, but it'll come back. My Netflix is down, it'll come back. And they think they're going to get 30%
may not
back.
come back.
May not come back.
A lot. I can tell you, look at the stocks that were the Nifty 50 in the 70s, at the beginning of the 70s. The most popular and the most widely held stocks were Xerox, Eastman Kodak, Polaroid, Sears, J.C. Penney,
Yeah.
Kresge, and so forth. They're all gone. They never came back. Never. Look at the dot-com bubble, at Netscape, the AOL, and so forth. These stocks never came back.
Yes.
Amazon is one of the few that came back.
So if someone was getting
Intel is still
still fighting
below the peak in year 2000.
Yeah.
Cisco, same. That is the fallacy. Do you think all these cannabis stocks will go back to the previous highs? Forget it.
Yes.
You think AMC and GameStop will all go back up? No.
There'll be a big cleaning house for sure.
For sure.
So do you think there is, if we're going to play just like a little devil's advocate, because I mean, there doesn't seem to be a lot of good news out there for sure. Is it kind of, if someone's saying, listen, I'm willing to take risk. So we're dealing with very specifically, someone says, I'm willing to take risk. Do you think some of these smaller forgotten markets, say partly energy and mining and these types of ones that would feed this new economy, do you think they have a shot? Because the oversaturated tech world, that takes a lot of money to move that. Doesn't take a lot of money to move other kind of forgotten about, mining stocks.
Well, the energy sector is now just around 6% of the S&P 500. At the peak in 1980, it was like 32%, 28%, depending what you include or not. But I'd say, I think that both institutions and the public is underweight mining companies and physical gold and silver. When I talk to investors, and because I have newsletters, I have obviously a lot of email traffic. Most people would not have more than 5% in gold shares and physical gold. My recommendation is to have at least 25%. But I have friends, I call them the kind of really true gold bucks, the consistent gold bucks. They would have maybe 80% in gold and silver, physical and in gold shares. I think 80% is on the high side, but I personally believe that you should have physical gold, but as I mentioned with the stocks, you should have it in different custody, some in the US, and some maybe in India, and some maybe in Singapore, and some maybe in Switzerland, and so forth. But it's not a diversification if you have it in US and Canada, Australia, UK, because it's one of the same.
Yes. That's an excellent little tidbit to share with people. That alone, I think, is invaluable. Thank you so much, Dr. Faber, for being able to make some time with us. We really appreciate it. And as I always mention, do check out your report, the Gloom, Boom, and Doom report. Not only is it, there's tons of information, they're long form essays that I just love how you're able to tie in history and literature into the newsletter itself. It's not only you're going to get a bunch of different lessons all together. And I love reading.
You have to do a lot of homework.
Good. Well, Dr. Faber, we really appreciate it. Thanks so much. It's always a pleasure catching up with you, and everyone, make sure you check out Dr. Faber's reports. We love having you on, and wish you all the best today.
Well, thank you very much. Bye-bye.
Bye-bye.
Bye-bye.